Are you ready to unlock the world of trading right here in Canada? Whether you want to invest for long-term growth or try your hand at day trading, this is the ultimate beginner's guide to starting your trading journey in 2025. Stay with me as I walk you step by step through everything you need to know, from setting up your account to understanding taxes, risk management, and even how to grow your portfolio like the pros. Before we dive in, hit that like button, subscribe, and turn on notifications so you don't miss any of our financial freedom videos. Drop a comment if you're already trading or just starting out. Segment 1. Understanding trading basics in Canada. Trading is simply buying and selling financial instruments like stocks, ETFs, bonds, or cryptocurrencies to earn a profit. In Canada, trading can be done through various accounts such as TFSAs, RRSPs, and non-registered investment accounts. These accounts have different tax implications that can either save you money or increase your costs if not properly managed. Trading can generally be categorized into investing, swing trading, and day trading. Investing typically refers to buying and holding assets for years to achieve long-term growth, while swing trading involves holding assets for a few days or weeks, and day trading means buying and selling within a single day. Canada's financial markets are regulated by bodies like RRSP, CIPF, and CSA. These organizations protect investors and ensure market fairness. Segment 2. Choosing a brokerage in Canada. To start trading, you'll need to open a brokerage account. In Canada, the most popular platforms include Wealthsimple, Questrade, TD Direct Investing, and Interactive Brokers Canada. Each platform has its pros and cons regarding fees, user interface, and available markets. Wealthsimple offers commission-free trading, making it ideal for beginners, while Questrade offers advanced tools for more experienced traders. TD Direct Investing is backed by one of Canada's largest banks and provides integrated banking and trading services. Interactive Brokers Canada is known for low fees and access to international markets. Choosing the right brokerage depends on your budget, trading style, and preferred markets. Segment 3. Types of investment accounts. Canada offers 3 major types of investment accounts. 1. TFSA. Tax-free savings account. 2. RRSP, registered retirement savings plan. 3. Non-registered investment account. The TFSA allows your investments to grow tax-free, and you can withdraw funds anytime without penalty. The RRSP is mainly for retirement savings and offers immediate tax deductions but taxes withdrawals. Non-registered accounts have no contribution limits but require you to pay taxes on capital gains, dividends, and interest earned. Choosing the right account structure is crucial to minimize your taxes and maximize your investment returns. Segment 4. Understanding stock market orders. One of the most confusing aspects for beginners is order types. Let's clear that up today. We'll explore market orders versus limit orders, stop loss and stop limit orders, day orders versus good till canceled orders. A market order buys or sells immediately at the best available price. A limit order sets a specific price at which you're willing to buy or sell. A stop-loss order helps minimize losses by automatically selling when the price drops to a certain level. A good till canceled order stays active until executed or manually canceled. Understanding these orders helps you protect your money and control your trading outcomes. Segment 5. Building your first portfolio. Starting out, you need to balance safety and growth. We'll guide you on choosing between stocks, ETFs, and bonds diversification strategies. Portfolio examples for conservative, moderate, and aggressive investors. Canadian index funds you should consider. Diversification means spreading your investments across different assets to reduce risk. For example, combining Canadian stocks, U.S. stocks, ETFs, and government bonds can create a balanced portfolio. Conservative portfolios may focus on bonds and blue-chip stocks, while aggressive portfolios may include growth stocks and emerging markets. We will explore examples such as investing in the TSX Composite Index through ETFs like XIC or VCN. Segment 6. Risk management and trading. Psychology. Risk management can make or break your trading journey. In this section, we cover position sizing, stop-loss strategies, emotional control, and discipline. Setting realistic profit targets. Position sizing ensures that no single trade can wipe out your account. For example, risking only 1% of your account on any single trade protects you from major losses. Using stop-loss orders is key to cutting losses early. Emotionally, traders need to resist fear and greed. Staying disciplined to your strategy, even when markets are volatile, is essential for long-term success. Setting achievable profit goals helps maintain focus and motivation. Segment 7: Day Trading Basics. If you want to try day trading, this segment is crucial. We'll talk about choosing a day trading platform in Canada, setting up charts and using indicators, time frames and best times to trade, journaling, and reviewing your trades for improvement. Day trading requires speed and precision. Platforms like Interactive Brokers Canada or Questrade offer fast execution and detailed charting tools. Indicators like the Relative Strength Index, Moving Average Convergence Divergence, and Moving Averages help identify entry and exit points. The best trading hours are usually the first 2 hours after the market opens and the last hour before closing. Keeping a trading journal helps you analyze mistakes and improve over time. Segment 8: Taxes and Legal Considerations. Taxes in Canada can get tricky for traders. In this part, we discuss capital gains tax versus business income tax, how to track your profits and expenses, reporting crypto and foreign investments, working with a tax professional if you trade occasionally. Your profits are typically considered capital gains and taxed at 50% of the gain. However, if you trade frequently like a business, your profits may be taxed as business income at your full tax rate. Keeping detailed records of every trade is crucial for accurate tax reporting. Cryptocurrency trades and foreign investments must also be reported to the CRA. Consulting a tax professional ensures you comply with Canadian laws and maximize deductions. Conclusion: you made it. You're now equipped with the foundational knowledge to start your trading journey in Canada. Remember, trading is a skill that takes time to develop. Stay patient, stay disciplined, and continue learning. If you find value in this video, please hit the like button, subscribe, and share this with someone who wants to start trading. Drop a comment about which trading platform you plan to use, and I'll respond with more tips. Thank you for watching, and I'll see you in the next video.